Good morning, Clackamas County businesses and our neighbors. My name is Kevin O'Malley, your Wilsonville Chamber of Commerce, and we are joined with a great team of Chamber of Commerce professionals today, and most importantly, our featured special guest, who's taking the time to walk us through, Rob Campbell from the Small Business Development Center. So we're going to walk around the room, and I'm going to ask you to say hi and introduce yourself. Rob, why don't you start first, please?
Yeah, thank you, Kevin. Rob Campbell. I'm the director of the Small Business Development Center at the Harmony campus at Clackamas Community College.
Wonderful. How about it, Victoria?
I'm Victoria Meinig. I'm the CEO of the Oregon City Chamber of Commerce and Business Recovery Center.
Woo-hoo. Kyle.
Hi there, folks. This is Kyle Lang from the Canby Area Chamber of Commerce and the Canby Business Recovery Center.
Great to have everybody here. So those who are watching live or coming back to watch the recording are here because they want to understand about PPP Round 2. So thankfully, our folks in Washington, D.C., our government has recognized the Small Business Challenge and has stepped up. And now we all, as business people, need to figure out how to make this work. So Rob, why don't you tell us first off about the question of who qualifies, this whole big question of eligibility. Can you walk us through, please?
Yeah, I can, Kevin. I'd like to make a little editorial comment. I was really happy, that this second round was signed and approved. It's, $900 and some billion. And if you've read the press lately, there's probably more money coming. But this is really directed towards the small business community. About 30 million businesses in this country can benefit from either EIDL loans or PPPL or both. So the change now is that they've the old program, PPPL1, it was SBA designation of small businesses 500 employees or less. This is 300 employees or less. The maximum amount was 10 million on the old program, and the new program is 2 million. But it also, the second program also applies to people that are sole proprietors, independent contractors, solo entrepreneurs, very much like the first one did. But the second program is greatly enhanced, and we'll talk about the details of that.
Good. So first question then is, in general, how does somebody qualify for PPP?
Okay. Well, first thing is that you have to be in business on the first round before February 15th, 2019. Same applies, you have to be in business in 2020. The eligibility requirements on the second round, you have to show a reduction of at least 25% in what they call gross receipts, not gross revenues, gross receipts between any quarter of between 2019 and 2020, or you can use the whole year. So if your business is down at least 25% in gross receipts from 2019, any quarter or the whole year for 2020. So, and we've done a little profile. A lot of our companies are not going to apply, not going to qualify because they took the original PPPL and idle money and actually made some dramatic pivots, adaptations, and they're doing quite well now. So they would not apply. They also opened it up to people like you good people. In the first round, Chambers of Commerce were not allowed to do PPPL. Second round, you are allowed. So.
And we are allowed to use the original PP1 designation of doing overall payroll, correct?
That's correct. How they figured this out, figuring it out on the new program and the old program is the same. Let's take solo entrepreneurs, sole proprietors, independent contractors, Kevin. They're generally sole proprietors. They file a Schedule C, and if you're a single member LLC, you can file a Schedule C. And you go back and look at 2019 line 31 on Schedule C, and you will see that that is the annual amount, and you divide that by 12 to get your average monthly amount, and you multiply that times 2.5, and that would be your application loan amount. Under the new program, people that are in a NAICS code of 72, which would be the hospitality accommodation categories, people that got hit the hardest between the lockdowns, between the federal and state, they can actually take that monthly average and multiply that times 3.5.
Okay.
So
that's important. So the restaurant has a slightly higher amount that they could potentially qualify for.
yes, and here's the nice part about it. You can actually, if they applied for the first round and got the 2.5, if they're eligible for the 3.5, they can go back to their lender, and it depends on their lender because PPPL is all through the lender. EIDL is directly through SBA, but if they can go back to their lender and just ask for an increase, and so the same paperwork would apply. They already have that paperwork on record.
Okay.
So, I might add one thing too. There is a maximum limitation of 100,000. So if you are a independent contractor, for example, and you've been paying yourself $100,000, and that's the max, well, you just take your average, which would be 83.33 a month, and multiply that times 2.5, and that's the maximum amount that you're going to get. I haven't done the math, but it's 24,000.
Yeah.
Yeah.
Cool. Speaking of contractors, self-employed folks. So theoretically, depending on, so you have to meet the threshold of the 25% reduction. So if income was up and down for a small business, they could choose to look and say, based on 2019 versus 2020, the quarter that had the most differential, if it qualifies them for, totally fair to look at it that way, correct?
No, Kevin, you're right on. And I'll tell you, I'll tell you where I've seen it already is third quarter. So third quarter would be between July 1st and end of September. So you compare that quarter with 2019, I think it's going to be pretty easy to qualify. You're going to see a 25% reduction in a lot of companies.
Okay.
Now, I will tell you too that gross receipts, that definition has been up in the air, but I got clarification on that just yesterday. The old program, if you had an idle loan and got the grant piece, which was $1,000 per employee, that grant part, they reduce your loan. So if you had a $100,000 loan and you had 10,000, which was the max, your loan would have been 90,000.
Right.
But they would take the 10,000 and they would reduce your loan forgiveness on the PPPL. So you would have to convert that to a 1% loan for 2 or 5 years, whatever. Now the new program, they changed that. You do that. It's not a deduction anymore. That is a big deal. The second big deal is that IRS ruling said if you had a loan forgiveness, PPPL loan forgiveness, you could not deduct those expenses from your taxes. And that is a big deal.
Yeah.
So we had people, I had some people call me and says, hey, I spent over 60% of my PPPL on my payroll. So I'm okay. I'm going to get 100% forgiveness. But if I can't write these expenses off, I'm going to have a huge tax liability because, if it's a Schedule C, sole proprietor, or a single member LLC or subchapter S, that tax liability flows through to you as either the member or the owner. Or,
Great. So that brings up a good next question. First round, I got a definite feeling that everybody was like, okay, we got to get the money, and then you needed to try and figure out how to get forgiveness. Most everybody's figured that forgiveness is kind of important unless you want to be paying a loan payment. So this round too, they're like already asking, okay, what's the forgiveness formula? So it's a little different. Can you walk us through, please, Rob, the forgiveness formula?
Yeah, I sure can, Kevin. Well, about 2 or 3 months into the old program last year, they kind of figured out, we're getting a lot of little loans. All the press was about the bigger companies that were getting all the money. Well, maybe they were getting the bigger amounts because they're up to $10 million, and most small businesses are not even going to qualify for that. But what they came up with is if you had PPPL loan less than $50,000, they came up with a new form. In that form, it's a 3508. It's always the same. So 3508, they came up with a simplified form. Anybody less than 50,000, you're basically, as long as you have records to back up, your forgiveness, third-party records, which would be bank statements, tax records, so that you're going to get approved. This new program, they took it up to 150,000.
Wow.
Because they did some statistical analysis, and the vast majority of all the PPPL loans are going to be that 150 and less. And being an ex-banker, it costs as much to do a $10,000 deal as it does a $100,000 deal. So in order to get them to, this is a great improvement.
Wonderful. Wonderful. So you made I think an important statement that we should underscore, which is, if you're going to self-certify, the caveat foundation was you have the documentation, because self-certifying doesn't give you a pass that later, if somebody comes back and says, please help us understand this, and you have an audit. So one of the things that happens is, right now, as 2020 just ended, let's just say that it wasn't third quarter and somebody was looking at, at fourth quarter. Again, there's a little fuzziness because maybe they haven't, done their taxes and stuff like that. As long as they have the records, whether they did their taxes for 2020, doesn't impact them. Is that a fair statement? No,
you've hit it right on the head. And I should have mentioned this before. This new round, you just have to certify that you are eligible for the loan. So you'd have to be the 25%. You got to spend at least 60%. On payroll, which is just like the old program. That 60-40 applies. The other thing too is, I didn't mention this. If you had an original PPPL loan, you have to have spent all the money appropriately before you can apply for the second round. You don't have to apply for forgiveness, but you have to spend the money.
Okay, great point. You mentioned the 60% on had to be spent on payroll. What can you spend the 40% on?
That's another change. What they found out, well, number one, 2.5 times on average payroll was not long enough because of how long this pandemic has gone on. Now, fortunately, we see light at the window with vaccines and all that stuff. So, I'm with you. I'm actually predicting third quarter, so I'm waving my magic wand.
Victoria, he knows he's on recording, so we.
Yeah, I was going to say, I'm holding you to this one.
So the 40% has been improved on this second round, and I'll give you some examples. It used to be on the first round, you could only spend that 40% on your rent, your like equipment leases. You could pay interest on a loan.
Utilities were included?
I'm sorry?
Weren't utilities included on that as well?
Yes, utilities were definitely included. And but on the new one, they've opened it up. And so, like, operations expense. So like if you had to buy some software, for example, or had to get some accounting stuff, anything to help get your business to kind of convert it to a new business model operationally wise, you can write those expenses off on the 40%. You can also write off property damages resulting in demonstrations.
Oh.
Now, I shouldn't say it's too loud.
Yeah, please don't encourage bad behavior, but if you were the victim of bad behavior, you have some relief.
Yes, and obviously, as all that kind of stuff, insurance is the first relief, but obviously, you have deductibles and maybe not covered. So that's, if you had signed a contract with the supplier, and then things change, you still had to pay that supplier, you can still write off that stuff.
That loss. Okay.
Yeah. Now the big one is modifications you've had to do to deal with the pandemic, the lockdown. So it's sanitizing your place. It's personal protection equipment. Every time you go in, you see that plexiglass, that's a barrier. Originally, that stuff couldn't have been written off, but now under the new program, it can be.
Very good. there are some potential retention tax credits that should be mentioned. They're complicated, and we're going to tell people where they need to go to get all the great information from SBDC later. But in general, there has been some new changes, or just a reemphasis.
Yeah, I mean, Kevin, I couldn't believe this when I saw this new bill. I was surprised. Under the old bill, under the original CARES 1.0, if you applied for PPPL and got it, you could not apply for an employee retention tax credit.
Okay.
And back then it was like 50% of their wages. It was up to $5,000. So it was kind of either or. Now it's and. So even if you get a new PPPL loan, you can apply for this tax credit, which actually has been extended to July now. It was originally March, but now it's July. And they have increased it from 50% to 70% of allowable payroll costs. They will not allow you to deduct on the tax credit the amount of wages that were deducted that you got forgiveness on the PPPL. They're not going to let you double dip that, but they'll let you do the rest of it. And they've increased that from 5,000 to 14,000. So it is something that you definitely not need to talk to your tax professional about. It is a complicated kind of a formula to figure out, but it is a huge benefit. So the three big things that you want to take away from this is up to $150,000. If you certify and you've got documentation for forgiveness, you're going to get it. And let's say you don't, you still get the loan at 1%, for up to 5 years. That's good. The other thing is, I tell my clients, you can always give the money back. If you had it and don't spend it, you just give it back, and then there's no loss, no foul.
That'd be a good problem to have.
Yeah.
Yep. It's a good problem to have. Nice to have a little safety, a safety net right now.
Take the money.
Victoria, do you have any some other questions?
I do. So now for those that applied for the EIDL grant originally and didn't receive the full 10K, are they eligible to go back and reapply for the difference? And is that going to affect them applying for the PPP?
Victoria, you just have to ask me this question because I don't know the answer to it. I do know what the process is going to be, but I don't know how it's going to work because I don't think Treasury and SBA have figured it out either yet. Under this new CARES package, they have allowed $40 billion for additional EIDL grants. And just as a history for this, people that applied first out of the chute on EIDL, they had to go back and reapply because of a software glitch.
Mm-hmm.
Second round, they got it up to $1,000 per employee, up to $10,000. People that applied late didn't get the grant. So everybody wants to know, hey, if I didn't get the grant, can I go back and get it? Because I got the number of employees. And if I got just a partial grant, can I go back and up and get the 10,000 if I have it? And the answer is yes, but how that mechanism is going to work, I don't know. I was told by our SBA district director, Marty Golden, that SBA is going to go back. You don't have to do anything. SBA is going to go back and they're going to look at all the applications that they have. And they're going to kind of look at underserved markets and rural populations, and they're going to look at that first. But the answer is yes. I mean, they've done this. Now, the other part too, PPPL forgiveness and EIDL grants are not included in gross receipts.
Okay.
Now, some of the state and local jurisdiction mini grants that have been going on, you all involved in, that may be included in gross receipts. I don't know exactly, but it could be.
Okay.
That's a big deal.
Yeah.
Mm-hmm. Yeah.
Yeah.
We've been pushing everyone to get those grants, so that'll be interesting to hear.
We had an interesting question from someone, one of our businesses, very, very forward thinking. So they're saying, there's talk of the round 3 stimulus coming soon. Any thoughts as to whether whether, file now or see what happens?
Well, I personally think there's no real rush to apply for this second round. And the reason I feel that way, I mean, I hope I'm right. There was about $130 billion left over in PPPL in the first round. Now it's been increased. It's like $230 billion. So, and like, as I mentioned, a lot of companies are not going to be able to be eligible to apply.
Yeah.
So, I do think you need to do this calculation between 2019 and 2020 and see if you're eligible, number one. And then I would go ahead and apply. I think this third round of stimulus, from what I've seen, it's going to be more institutionally driven.
Right.
I think there is provisions that if we ran out of money for EIDL or PPPL, there will be additional funding for that. But that all depends on vaccine, how many people are getting affected, what the hospital occupancy rates are. There's a lot of, but the big money they're talking about is institutional. I mean, they're talking state, local. I mean, and they're talking about bigger companies that have a lot of employees, like the airline.
And we would hope, our state has wanted to do some stuff and hasn't really been able to find the money. So the hope is that that gets solved here in round three. Victoria, any other questions for Rob right now?
I think I'm good. Thank you.
Good.
I appreciate it.
You bet. Just so everybody knows, Kyle's okay. He texted that there are technical difficulties. So for those of you who haven't been out to Canby later, it's always been a great place to live, work, and play. But they have so many houses and so many new businesses that I think somebody dug something up, and they're having internet problems today. Because if you noticed, he was kind of sparkly, but he's always sparkly in a literal, not in a literal sense, like you saw him. So Kyle sends his best, and Canby Chamber's there to answer your questions. But those who want to get our main executive director here of our fantastic SBDC. I'm going to go ahead and share the screen here because we want to kind of let you know what you're going to do there to find. So if folks want to reach out, they're going to go to small business, right?
Yeah,
whoops, wrong one. There we go.
Yeah, there it is. OregonSBDC.org. Yeah.
So they're going to land on the main page here. They're going to go down and say, find your center. That first step. Now there are lots of great resources, but we're pretty biased here. We think we've got the best SBDC in the state. Some would say, since they've won national awards, probably in the country. But Rob's too modest to say that, so we're going to say that for him. If you don't know a business owner about SBDC, not only did you get great information on PPP, but you need to, not walk, not run, but get the heck over to SBDC's website here. And this button is kind of important. So what am I registering for when I hit this button?
Well, first of all, Kevin, you hit Central Oregon.
Oh, did I?
That's the state, right? And Clackamas.
Okay, I am really. That's why we do this thing live, so we can make sure that I make mistakes live, and everybody realize, as my wife of 40 years will testify, that I'm not perfect. There we go.
There we go.
We're registering at the Clackamas Community College SBDC. And what are we registering for?
Well, what you're doing is registering to be contacted by one of our staff members to ask you some questions to help you navigate this, and if necessary, we have programs at our center that provide classes, workshops, and events. That's the content, but our value proposition is that we do one-on-one, no cost, confidential business advising that takes content and put it into context. So people that have questions about this stuff that we're talking about, they can contact our center and just put in their information. It's all confidential, and then you will be contacted, and if necessary, we will set you up with one of our business advisors to help you navigate this process.
Right. And again, if you as a business owner haven't heard, it's an incredibly best kept secret. On a personal note, previous lifetime as a small business owner, I attended for 3 years SBDC. It was one of the single most important things that I did for my business. I have a good friend who I don't have a waiver signed from, so I'll just say Steve. We tease Steve because he's been going, 12 years, probably 12 years. And the reality is that he's a very successful small business owner because, and he laughs, he's got a great sense of humor, but he says, you know what, my business is different every year if I'm innovating it. And so it forces me to sit down as a small business owner who doesn't get a lot of time like any small business owner to really sit down with some very competent, dedicated professionals who care about small business to say, well, have you thought about this? Actually, that doesn't make sense to me. So you've got so obviously we're in a pandemic time, but whether you're fine for pandemic and just want money, this is another resource to stay on top of resource. But if you're looking to do almost anything for your small business, could be succession planning, could be any of that, SBDC is a great opportunity for you to get some help. So
thank you, Kevin. Thank you.
You bet. You bet. Victoria, any message for Oregon City Chamber at this point as we wrap it up?
Just keep going, everybody. We're getting the help out as quickly as we can. And let's just keep going into 2021.
If they haven't heard of the Business Recovery Center, there's a short-term pause right now, but we're highly encouraged that all of your local chambers in Clackamas County will again be able to help you with some additional resources and be there, thankfully, because our county is going to step up. Our county commissioners, we're confident, are going to step up and say, hey, yeah, we funded this in December. It was very successful. We want to continue it through first quarter. So if you think that's a good idea, you can always let the commissioners know, just to say it. So thanks so much. Any comments you want to leave behind, we'll forward them on and try and get you answers on your Canby Chamber, Oregon City Chamber Facebook pages, or of course the Wilsonville Chamber. And Rob, we can't thank you enough for taking time out on a Friday to come visit and share the knowledge and all the help. Appreciate it.
Have a great weekend, everyone.